Hey, what's up guys? My name is Moda and welcome back to the Mining Stacker YouTube channel. Today's video, we're going to go over our strategy as far as what we are going to mine with our Jasminer X16. Going to go over just my personal picks, what I'm doing with it, what I'm mining, because again, that's kind of the beauty with this thing is that it does give you that versatility to have those options, right? And there are quite a few options kind of all over the place. We're going to go over as to why I'm mining the ones I am, which ones I'm most bullish on, and kind of just different factors to consider with the other options. Okay, so if that sounds good, guys, stay tuned. Let's get right to this thing. So we're going to talk about the Jasminer X16-Q. This is the 8 gig model, the 1950, which is what we have behind us, and this is the one we're going to kind of focus on. The advantage again with this guy versus the QE model is the X16-Q has those 8 gigs of RAM, which is kind of a big deal, and it's kind of proving out to be a bigger factor than even what I had initially thought, especially with ETHW, right? And that's the main reason, and that gives you just a whole nother option that a lot of the competitors don't, including a lot of the guys who are still not even released yet. Okay, so let's get into the specifics. So I've had mine for about a month now, and performance wise has been great, right? As far as yield goes, initially when we got it, because you guys know the coin I'm most bullish on here is OCTA as far as stacking for this upcoming bull market, which I don't have a whole lot more time, but that's the one I am most bullish on, so that's the one I have my focus on. So initially, immediately, that's what we started mining. But not too long after, they did have their emissions reduction, which changed the profitability quite a bit. So we switched over to ETHW, as that was next in line for being most profitable, and that's what we have been on, right? So currently, we stacked our 10 octa initially, and then we are up to about 20 ETHW. As far as individual performance goes of the unit, it's been flawless. Yesterday, I did have to reorganize some stuff, so that's what this dip was. Did unplug it for a little bit. But you can see here the overall performance is right where it should be at, right? So it's been good performer, 0 issues, 0 restarts, 0 reboots. Pretty much just as passive as it gets, right? So performance has been excellent there. Now, as far as our options go, let's go over that. So let's check out some profit calculators. So this is why it's always good to like kind of cross-reference just to get an idea, because in this case, for example, we're referencing mining now. They have Zther number 1, ETC number 2, ETHW number 3. And as we look at the yield that they're basing your revenue off of, it is a little bit lower than what it should be. It's about 10% off, right? There's always going to be a variance anywhere from 3 to 5%. Especially there's updates like aggressively, like you see here, even just every few seconds. But it is actually a little bit off. They have your daily yield being about 0.67, which in reality we are yielding closer to about 0.75, right? You can see yesterday's yield was 0.75. The day prior, this is the day with the disconnect, that's a little bit lower at 0.739, 0.77 before that, 0.79 before that, right? So averaging about 0.76. So theirs is a little bit off, so we're actually going to reference hashrate.no. They do actually have the Jasminer listed. They don't have all the ASICs, but the ones they do are pretty accurate, right? And this being one of them. So as we look at the yield for ETHW, so we can cross-reference, it's 0.763 is what they're listing, and that is pretty much where it's at, right? So basing off of their list, the most profitable is actually Zther, Larissa, ETC, and then ETHW, and then at the very bottom being OCTA. Okay, OCTA is the one that got impacted the most. They've had the drastic difference just ever since that emissions reduction. Okay, so we're gonna kind of give our thoughts on the different options here, and it just really depends on what your individual goals are, right? Like, why did you purchase this ASIC? What are you looking for? What are you looking to do with it, right? So again, for me, my main appeal is actually OCTA. It is one of the coins here. It's not just to get it, just to use it on to swap out for other coins. I know that's something that a lot of people do. They just mining like ETH Classic just because it is a larger coin and it is more stable and it's just easy to swap with, right? Just because the liquidity's there, it's on a ton of exchanges, super easy to do, right? Gets a little bit more difficult with these smaller cap coins, but in case you aren't familiar, I think a lot of people tend to forget how big a coin ETC is, right? It's ranked number 40, nearly a $44 billion market cap. So massive coin. So guess what? It's going to be more consistent. But at the same time, if you're going to be mining and holding this thing, may not have the biggest upside in comparison to some of the competitors, right? Realistically, though, this is the one I would have most faith in if you were going to do that, just because the others, there are a lot more variables and a lot more risk when it comes to that, right? So one of the other popular ones is ETHW, and that's currently what I am mining right now. And this one is kind of a weird one, right? It's one that has consistently been one of the more profitable options, has held up a little bit better than some of the other coins with this recent dip, and it's doing its thing. Right now it's ranked number 243, $370 million market cap, and it's been holding up fairly well. One of the big appeals here is that it is easier to exchange than some of the others, especially if you're in the US. It is actually available on Kraken, right? One thing I didn't know, didn't think to look, because initially the plan was, again, my whole thing is to stack more Octa, right? So the initial plan was go with what's more profitable, consistently more profitable, right? We've been eyeing the market now for a month, so we've been able to keep up with it. And that seemed like it was going to be a good strategy, so the plan was to sell it on ZEGX and just buy Octa with that. So essentially just swapping for it. Did not realize ETHW is actually not on ZEGX. The reason we're referencing ZEGX is because that's one of the exchanges for Octa, one of the few exchanges for Octa, right? But again, did not realize. So ETHW is on Kraken though, so the goal here, if we're going to do that, we're going to have to send it to Kraken, sell it there for USDT, and send that over to ZEGX in order to swap it for that Octa. It's kind of more of a pain than what I was initially thinking, because now you're kind of doubling the fees, complicating the whole matter, which I'm not a big fan of, right? Especially for a few cents. Initially, when Octa's emission reduction happened, the profitability difference was pretty massive. We'll go over here, or not even go over here, we already went over it. It's actually pretty close now. It's close enough to the point where if the goal is just going to be Octa, it's just going to make more sense to go directly into Octa to kind of just avoid all those extra steps, right? And this is where it kind of also just dependent on the extent of your farm, right? If this is your only ASIC, or you're just managing this and like one little rig or something, not that big of a deal. But when you're mining every shitcoin possible, it gets a little complicated, right? You want to just try to minimize things as much as possible. Even if you have to pay a few more cents in transaction fees, or you're losing a couple cents, sometimes it's worth it. If it's a significant difference, then obviously go for it, right? But in this case, for a few pennies, might not be worth the hassle anymore, right? I'm going to probably leave it on ETHW for another month, or maybe not. We'll see. We'll see how things hold up. It's just currently right now, ETHW is actually holding up a little bit better. So that's why it's kind of been more appealing to do that, right? So another thing to factor in, because I actually just sent some ETHW over to Kraken to exchange it. It takes forever, right? It's not the network. It's just Kraken needs 20,000 confirmations in order to have it fully deposited. So it's going to take about 3 freaking days. So just kind of factor that in, because initially the thought was like, okay, ETHW is doing good. Octa's kind of on a dip. Right now is a good time to exchange. Not going to work in my favor unless the price action remains the same these next few days, which it may or may not, but that is definitely another factor to consider if this is kind of your end goal, if you're in the US, right? So for me, realistically, probably another reason to just straight into mining Octa, right? But let's look at the hash rates here. This is for ETHW, and you can see how the hash rate has been kind of growing, actually, especially recently, right? And a lot of it has to do with Octa's emission reduction. Because pretty much right after that happened, what did people end up doing? They switched over to what's more profitable, or more consistently profitable, and they went with ETHW in many cases, right? The reason that Octa actually ended up balancing out and being just about as profitable, right, it's a little bit under, is because the difficulty decreased quite a bit, right? You can pretty much see it not too long after that emissions reduction. It went down pretty significantly, right? Literally got cut in half. Okay, so that's kind of the purpose of difficulty and the hash rate and everything, just to kind of balance each other out, right? As people leave off, your yield kind of goes up, and therefore profitability goes up. But realistically, it's more about the yield, right? So like even if Octa's fiat value had gone down more, you're going to get more Octa here just because of the difficulty decreasing like that, right? So this is one of the factors why it makes sense to go back. Initially, again, these first few days, Pretty significant difference, but as people either unplugged or they switched over to another algo, which is the most likely scenario, or not a different algo, a different coin, the difficulty decreased and it's down here. Will it stay down here? It's going to depend on OCTA's price action. If it kind of stays down where it's at, then probably will, right? So that's kind of been one of my biggest things. I don't want to flip-flop too much. I'd rather just kind of set it and forget it kind of thing. So that's why I'm definitely leaning over to just leaving it on OCTA. I'm going to wait and see. Probably just give it another few more days, or at least until the market starts turning around, right? It's kind of been on this downtrend. Hasn't really turned around yet. So just kind of waiting to see how they both respond, right? Initially, things went up a few percent. But I want to wait to see till the whole market kind of recovers, right? When BTC is above like 100, 105, when it's kind of back to where it was, to see how they both respond. Which one responds faster? If one responds faster than the other, we're going to kind of play it out and see how they react, right? I love looking at those data points whenever we have these dumps, just to see how aggressive certain coins dump and then how they respond on the rebound, right? That kind of tells you a lot, at least for short-term price action, right? So again, those are the two options. Now, as far as some of the other options, right, one of the other ones that's kind of appealing was Zther, right? Zther is appealing because of the degen factor, extremely tiny market cap, fairly new, right? So a lot of reason to kind of be interested here, but it's going to be extremely volatile, right? So there's been days where if you're mining it, went up a pretty good chunk because just again, it's a tiny coin. The market cap on this thing is only 1.4 million. Okay, so kind of what's intriguing here is the fact that it's new. Their emissions is extremely aggressive. Okay, so pretty much every 2 weeks, the reward per block goes down aggressively, right? Initially, right from Genesis, it was 10,000. 2 weeks later, 9,000. 2 weeks later, 8,000. So on and so forth. We're currently, I think it's down to this phase, down to the 7,000 ETH per block. And that's a massive difference in a small, tiny amount of time. So realistically, if this is one that was on your radar, is on your radar right now, especially if you have a lot of hash rate available. If you're a tiny guy, like just have a single unit, like in my case, yes, it's appealing to mine it currently because of this. The yield is going to be fantastic, but at the same time, the coin is so damn cheap, right? If you think it has potential, if you think it's not going to rug, in my case, what I'm doing, I'm just going to buy a couple $100 worth of ZTH, right? Realistically, this late in the game, I just need to stack the coins I want to stack, right? Realistically, it is high risk for me to waste 2 months of mining on ZTH, for example, because realistically, that would be the name of the game, is to do it now, do it aggressively. Try to get it before those emissions reductions. Try to get as much as you can. But a lot of risk with this thing potentially rugging or not doing so well, getting stuck with it, versus OCTA is one that I have a lot more faith in and one that I'm actually bullish on. Right here is just literally the degen factor, which can work out extremely well or can bite you in the ass. Right, so this one is extremely new. Again, if we go on ZEGX, if you go on CMC, there's practically no history. But if you go on ZEGX, which was one of the first to list it, you can see here back in early November is when it listed on here. And you can see the price action here. So realistically, it's not at these highs, right? Which profitability on the Jasminer, if you're holding, went up pretty drastically on these days, especially if you sold during that time. And it has that potential, right? So that's why for me, again, if you're going to yield about $3 a day of this thing, a month would be about $90. So therefore, 3 months worth, about $270, about $300 worth. That's what I decided to do instead. So it'd be the equivalent of like if I were mining it during that time. And if it does well, cool. And if it doesn't, goes to zero, also cool. But realistically, as far as mining goes, I want to mine coins that I feel confident that I want to stack in, right? So a lot of risk here, a lot of potential here also, but again, a good reminder of this is we've already had similar examples with other coins on ETH hash, right? If you guys remember XPB, POW blocks, this is one that back a while ago went up massively, and then it's basically dead, right? So kind of the same scenario initially when it came out. You can see the videos on there, just Google it or search it and you'll find all the videos of all the people talking about it, about how much it was pumping or whatever, how much it was making. But at the same time, it essentially is actually fully gone, right? They have no longer a website, no Twitter account. They essentially fully rugged, right? So it went from being extremely profitable to nothing in the amount of time, right? So if you are going to switch to one of these coins, again, there's risk here, so that's why I did buy the 3 months worth. If it goes to zero, it goes to zero. If it 10x's in a small amount of time, then we'll sell it and exchange it for OCTA, right? Maybe it goes up beyond that. Who knows? Who knows what the real potential is? But again, the main appeal here is just the fact that it's this fast emissions here, right? So if you're a person who does have a lot of these things, or a lot of the bigger ETH ASICs, might be worth it to mine for a little bit, hang on to it, and then go on to the next, right? But again, with just a single small unit, I'm not going to waste my time on it. The coin is so cheap, I'll just buy some and get some of the rewards that way if it does go up. Okay, and if you are interested in purchasing this thing, right now is probably not the worst time in the world. Can it continue to dump further down to these lows? Sure. But realistically, there's just so much more upside that I would potentially purchase some down here. I did get lucky and get some down here in this 3 range. I think it was like 3.8, 3.9 or something, which is pretty much where it's at right now. And I just decided to buy some instead, right? So again, $1 million market cap, 1.4. As long as it doesn't rug, I potential to get a $10-20 million market cap fairly easy. Can it go beyond that? Sure. Can it also rug? Sure. I'd personally peg it at like a 50-50. Personally, we'll see where it goes. They're pretty active, but again, it's just high risk factor here, right? So just factor that in. One of the others is Larissa, and this one, the big thing with them is their nodes, right? Initially, that was the big attraction with them, and that's also a reason that was not an attraction for me. Immediately, as soon as a coin launches and immediately they want to do these bullshit nodes that don't do anything, it's a big red flag for me, right? Could it be good? Could it do something? Sure. Hopefully you guys are just stacking if you guys have this thing, but again, it's been out for a while now. You can see the price action here has been relatively atrocious. Hasn't really taken off at all. The market cap is not even $500,000, and considering it's been out this long, not looking too great, right? Maybe it does well. Again, it's the same kind of thing. Maybe it pans out well, maybe it doesn't. High risk factor. But this one with that immediate launch of those nodes was just not appealing at all for me, right? So that is another option though. Again, my main play would be OCTA. That's the long-term goal. Their chart, as far as the year goes, initially one of the better looking charts in the bear market, but has been just kind of sideways, right? You can see this clear support here in the dollar range, and it's just been kind of going up and down. Kind of very similar to Caspa in a way. Caspa did extremely well in the beginnings of the bear market, but this past year has just kind of been sideways, right? It's just kind of been in a certain range, kind of goes up, goes down. But overall, it is one I am bullish on, though. It is a tiny market cap. It's ranked number 957. Bullish on the project, what it is, and what it kind of represents, right? It is an AI play. They are actually doing rendering, not just like a network of GPUs like a lot of the others are. So there is potential here. Again, it is a small market cap. We don't know where it's going to go, but out of the coins, this one, very good potential. Does have that AI narrative going for it, which we know is going to be a big thing, hopefully next year. And it being only $40 million market cap, I'd say anywhere from a 5 to 10x is fairly easy. If it takes off, maybe it can do potentially more. Maybe it doesn't, right? At the end of the day, we don't know, right? But this is kind of where I'm placing my bets on. This is kind of filling the void of an AI play, kind of a degen play, kind of a small market cap play, right? This is before the actual run-up. Because again, if you wait until this thing's $2-3 to start mining it, the yield is going to go drastically. These are the times to be accumulating, right? And when you see the price points and you see where it's been and where it's at this past 12 months, not a bad place to be accumulating, right? So kind of to each their own as far as what to mine. My strategy again is to stack as much OCTA. Currently doing it via ETHW though, okay? We'll see how much longer, because there is risk here even doing this play, just because, again, when things pop off, if they pop off collectively at the same time, it is very likely potentially that one is going to run harder than the other. So if you're holding this one and just holding a big bag of it in hopes to exchange it for OCTA later, you do run the risk of OCTA kind of outperforming it, right? Which is kind of possible because of how, again, it doesn't take much liquidity for this thing to pump up massively because of this $40 million market cap. When in comparison, ETHW is pretty much 10 times that amount. Okay, so although this one may be more profitable currently, probably not always going to be the case. Okay, realistically, I have more faith in getting more multiples out of OCTA than ETHW personally, but currently, right now at least, while it's more profitable, it does make sense to swap out for it, right? Being this close though, realistically, I'm probably going to end up switching, just staying on OCTA and just being one less thing to do, right? Because realistically, you're probably going to be able to yield more by doing the strategy, at least for now. But the last thing I need is to add something, even just doing it on a weekly basis, or realistically, if I'm going to do it, which what I'm doing now is doing it on a monthly basis, it's kind of a lot if you're mining a lot of different projects. Like, I'm at the point where I'm actively in like 18 to 20 projects where I'm actually getting yield, right? So keeping up with them and doing swap rates between like this and like the Helium Mobile and all those things, it sounds pretty inconvenient to do it. Like, oh yeah, I'll just exchange when it makes the most sense. To keep up with that amount of projects, it's very daunting, right? So for me, I much rather do the set it and forget it route. So for that reason, pretty much that reason alone, I will probably be going solely to OCTA. We'll see. I'm going to give it a few more weeks again. I'm going to wait for the pump, but realistically, it's just mostly going to make more sense just to go fully to OCTA. At least for now, while the yield is good, things will probably change as the price appreciates, and we'll see what happens. We're going to follow things closely, though, but again, it's one of the beauties with this thing. But if you're an overthinker like me, it's also kind of a, not necessarily a negative, but it's another problem, I guess, which is a good problem to have. It sounds like I'm complaining about it. It is a good thing. It just depends on, again, the extent of your farm. If you're a person who's only managing like one or two rigs, one or two things, then it's not that big of a deal, right? You try to maximize those things. But if you're scaling and you're at the point where you're into all these damn things, then it gets a little crazy, right? But let me know in the comments, guys. What are you guys doing? Are you guys... Let me know what you guys are mining, actually. I know quite a few of you guys are into these ETH ASICs. Let me know in the comments what you guys are into the most. Are you just set it and forgetting it? Or are you just mining something and in terms of getting something else? Which I believe you can actually even use unminable. That may be another option here as well. But let me know in the comments, guys, what you guys are doing. Please comment, like, and subscribe, guys. Thank you for watching. I really do appreciate it. And I am out.